What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm going to go over some tips and tricks for getting started with TradingView, and this is going to work whether or not you use TradingView via your exchange, KuCoin, Binance. All of their charts use TradingView as their primary basis, and or if you use TradingView by itself. So that being said, guys, we're gonna hop in. All right, sorry about that. I just wanted to make sure we were actually live. I couldn't tell for a minute. All right, sorry about that. I just wanted to... We're gonna go into we're gonna get into TradingView, but before we do, just please remember, none of this is financial advice. I'm not a financial advisor. Simply make these videos, use them as you see fit. But this is really going to be just the basic tools on TradingView and how to use some of the most basic stuff, just so you can get a good grip on starting a trading journey. I do have to mention this though. Today I just hit like the mother of all trades. Got into Luna at 90 cents this morning and was able to sell above $3 on 20 times leverage and made 5,634% gain. So that was like the biggest trade of my life ever. It was like an hour of hold time. So that was an insane trade on Luna. So the first thing I'm going to do on TradingView is I'm going to go over some of the simple things that you can do just getting started if you're using TradingView by itself on the standalone mode. Up top here, you can create lists for any of your currencies. You see I have a futures list, I have a long-term draws, scalp draws, stocks. So these different draws for me, obviously the futures is going to be perpetual contracts. Long-term draws are going to be drawn against USD. My scalp draws are going to be drawn against USDT, and stocks are just stocks. But the draws will be different, and I use them from different exchanges, just simply because I want to have different levels of support resistance tighter if I'm trading on a 15-minute window or a 5-minute window than I will on my long-term draws if I'm trading on a daily or 4-hour chart. The window in which you look is very important, and sometimes if you use the same chart and you keep going back and forth, it can start getting really cluttered and really crowded. So I separate into different draws. So first things first, your lines. This first tool here, trend line, horizontal line, vertical line, and parallel channel. These are the most common draw or line drawing tools that I use on a consistent basis. Use them all the time. And we're going to just take a trend line here, and we're going to draw a trend line. This is on the NASDAQ on a daily chart. So I want to go from this bottom, and we're going to draw up to this peak, or up to where the trend line broke. Now you see this V shape here. This was March of 2020. This was the COVID dump when the economy got shut down. So you could start after this point and kind of leave this out, but at this point it was such a quick move that it got right back above the same trend line. I'm keeping it as it is. Then your trend line is 1,000 people will draw 1,000 trend lines, and they might be slightly different. So each trend line is to the individual user, but just use it with caution that you're not going to be 100% accurate. And your trend line is a guide, it's not a guarantee. But now you see the trend line did break entirely, and there's obviously a downtrend in the market now. We know that there's a downtrend in the market. So now we can take a trend line And we only have 2 points, so we're just going to draw it like this because this is the 2 points that we have so far that would have touched the resistance of the trend line. And this is going to go into my next tool, one of my next favorite tools, and you can use this on any time frame for large broad moves on a daily chart, for little swing trades on the hourly charts. But one of my favorite tools is going to be your Fibonacci retracement. So on this toolkit on this side here, I don't use much of this at all. I don't use a whole lot of this at all. But the Fibonacci retracement and the trend-based Fibonacci extension, I use quite a bit. I use this all the time. So we're going to do a retracement on the NASDAQ right now. And what I want to show you is that the Fibonacci retracement is always going to be, the retrace itself is always going to be against the trend. If the trend is going up, the retrace is going to be down. If the trend is going down, the retrace is going to be up. We're on a retracement. I'm going to go from the peak high down to this first bottom touch. And you can see that it retraced just about up to the 0.618. There's a 61.8% retrace. And it almost got there. Didn't quite make the 618, but it was between the 50% and the 61.8%. So this is a very healthy retrace. This is pretty standard in any market to get between 50 and 618. Now, so actually, if you put it on the close to the lowest close, it did actually hit the 618. So yeah, close the day there. I was a little high on my initial draw, and that is another thing you want to do. You want to make sure you go close of the day, or open close the highest point to open or close the lowest point. And then we closed here right at the 618, and we start to reject off immediately. Now what this tells me is that we will now be entering a Fibonacci extension. This Fibonacci extension tool, you will use it the same way. You will go from your peak to your low to your 618 retracement. And now you will have targets for, if you have an extension of a 0.786 extension, we've already broken through. We're heading down towards the 1.0 extension. And I think the overall target that I would see, and I would be shooting for right now for the target low, for the absolute bottom of this recession market, will be the 1.618. If it touches this, it will be a quick touch and then a reversal off of this. And this would put us at about $9,334 on the actual NASDAQ. And it would put us right about at the peak prior to the COVID dump. Now, when you want to set lines of support and resistance, go back to this first line tool, and you have your horizontal line. Again, there are hotkeys here too: Alt plus T, Alt plus H, and all these here you can obviously see them. So you go right here on the 618 and go Alt H. Set up a horizontal line here. This is going to be like our last level of support, I believe. And you can go through and we can set up different levels of support and resistance. And we have one here that we're actually up against. Wrong button. We have right there. Actually, let me move that. I got totally this right here. Let's see, did we wick off that? We fought it once and then we came right through it. But yeah, that was a peak high, broke through it, retested it here as a swing low, and then one off of it. So that's definitely an area of support resistance. Now we have another one you know, right in this area here where there was a lot of support resistance, a lot of touches here. So you can go through and do these as you see fit. You can make these support and resistance horizontal lines as you see fit. But one of the biggest takeaways from this that I want to make sure to put out there is that the Fibonacci retracement definitely goes both up and down. It works in both directions. I think a lot of people would like to use a Fibonacci to see how far of an extension to the upside they can get, but they don't really want to use it to see how far the extension is to the downside. And I think it's critical to be able to see these both ways. One of the other tools that I think a lot of people don't realize is on any of your lines, your trend lines, your horizontal lines. I'm going to close out these Fibonacci's. On the Fibonacci 2 settings, I always take the background really, really low, almost completely no opacity at all. It's standard. It kind of sits with colors like this. I don't like the colors being all the way through, so I just like the line. So I go completely transparent on the background. Just want to give you a heads up on that. Close this out. You can put alarms on any of your trend lines so that if the price were to cross above this, you can set yourself an alert so that you know when the price crosses above or crosses below. If this this current line of support resistance that we're on, we're below it. If it were to cross back above, you can set an alert here, or if you're looking for the price to cross below this line, you can set an alert for this. So you don't have to constantly be looking at charts all the time. You can set yourself some alerts for some key areas. And right now, prices are getting wrecked even further. Wow, Luna is down to 37 cents. It is insane. But we're going to go through and we are going to take a look. We're going to take a look at Bitcoin and use some of these same tools and just show you what I do and how I use just drawing tools to your advantage without having to even really get into indicators. And then we'll go into some just simple indicators. So with Bitcoin, the first thing I want to do is I want to draw support resistance, and we see we have one right here that we're actually up against now. And we actually just broke through, and I think we completed a breakthrough of it. And then we have one here around 24,000, and these are getting a little bit harder to test because they haven't really been hit much. But this one here at 19.7 should be the all-time high from back in like 2017. Yep, and that'd be the all-time high there. And that is the low that I'm looking for us to come to, and to really test this low at least once, to at least wick to it, and then that should be like your blast off point. If it's not 24,000, if it doesn't blast off at 24, it should on 19. And we can go up to previous levels, and we'll see that here we had levels of support and resistance running through here. Like we crossed it a handful of times, but you zoom in, you see a lot of closes where it wouldn't close below, and stayed right on it while we were coming down. And while we were coming up, it was a critical line here. We crossed it, came back, retested it, and that kind of blasted off. So this is 37,666. And again, these lines are being used as guides. They're not, absolutes. Someone else might have their support resistance up here. These are not absolutes, and they're all subjective. So please keep that in mind. I definitely believe we have one. Let's call another one here. Right around 49. Actually, let's bring that down a little bit. Let's bring it down like 48. Okay, yep. And those are going to be your major daily support resistance ranges. And typically, when you have those massive ranges, in between them, price moves pretty quickly. Like once it broke through here clean, retested and stayed below, it didn't take long to come to the bottom. It came all the way up, almost all the way back to the top, and it kept trading inside this range. So typically, once these ranges get broke, they kind of get passed through pretty quickly. The next thing we're going to add to this is going to be a moving average. And I prefer smooth. So you have like the moving average ribbon here. We're going to have, I'm going to just turn this on. We're going to have 3 moving averages. And but if I just close this out entirely, we're going to go to indicators. Your indicators tab is right here. And you can just search moving average. There's going to be a whole bunch of them. Moving average convergence, divergence. That's actually, that's MACD. So moving average ribbon is one that's going to give you one indicator to give you multiple moving averages. So you can put that on there and you see there's 4 of them that pop up right away. I like to go into the settings and I change the color. My first I always do as white. And I go up 1 notch on the size. That's just my thought process on it, the way I like to do it. Green, 1 notch. Red, 1 notch up. I don't use a 4th, so I really just don't use it at all. And then inputs, I prefer 21, 50, and 200. And I prefer to use smooth moving average, so SMMA. Now this you can change and adjust as you see fit, whatever you see fit to use. If you like smooth, if you like simple, if you like exponential, they all work and serve their own purpose. I just think that for me, the smooth is the most reliable. Now you see we have moving averages to go against. And on the daily, you'll see that we rejected on April 20th. We rejected off the 21. And we had a long wick up and rejected off all 3. We passed through very quickly up to 43,000 and rejected off of every moving average and stayed below. And that's when we start to really tumble. This rejection, this long wick candle here, here, another little tool here. All these signs, I only really use a circle. That long wick there, that was a sign. That was a sign that the bears were still in charge and they were protecting the moving averages, and everything free fell after that. From that point, if you would have gotten in it to close this candle, to close here to where we are now, 31% drop, that would have been a hell of a short. That is an insane short if you were able to see that, notice it, then have the confidence in what you're seeing. Have the confidence in what you're seeing to see this rejection where the price passed up through all 3 moving averages and then was rejected back down, closed below the open. So not only did it wick way up, but it closed near the bottom. And if you opened a short here, you were almost never, a wick here of maybe a % or 2 before going way down. You were in great shape to hold that short position if you have just confidence in the fact that you're drawing support resistances, you're drawing areas, and coming down that you've already rejected off of this area at 48K. You've rejected off of this support resistance, and it's been resistance multiple times. There's a resistance back here. So we know we had a rejection. And then we passed all the way through and retested these moving averages before falling again. So that's a huge piece of information, a piece of the puzzle that you can put together, but you have to see it and you have to be aware of it and confident enough to know, to trust that you saw it and trust that you were able to see the signal as it was. And this is with no indicators other than just moving averages. Now let's see if there's anything else that we can add to this indicator wise that we can add just to see if there's any other confluence. And I'm always looking for confluences to take a trade, and I want to have at least 3 of them. I want to have 3 different things that all converge together at the same time to tell me that this trade is the right trade to take. So the next indicator I'm going to put up is I'm going to put up just the relative strength index, the RSI. This is a simple to use indicator, and I'm actually going to keep it as it is right now. I typically change it and change it to just make it a way that I like to use it, but it's really not required. Right now I want to look, I want to see if there's anything that the RSI can tell me. See, right before we had this rejection, we got a hidden bearish divergence. So I'm just going to draw a trend line from this to this. And we had a green candle, we had a small high. We came down and we made a new high here. There's a lower high, but we made a higher high on the RSI. So that's a very small bearish divergence, but it is something to be aware of, to see that the price was going down and the highs were being a lower high, but the strength was going up. So it was requiring more strength from the bulls to push the price, and they couldn't get the price up, and then the bears really rejected down off of that. So that was definitely a signal with a peak, then a doji, then a big wick rejection. So that's definitely a nice 3 candle pattern. So we've got rejections off the moving averages, we've got a peak with a doji and then a drop, and then we have a bearish divergence, or hidden bearish divergence. So that's 3 confluences to take a trade here, to take a short position that would have paid off very nicely. So the last really simple indicator that I wanted to discuss really quickly is just the MACD. The MACD is a really easy indicator to get started using. Moving average convergence divergence, MACD, the MACD. And as you can see, it's an oscillator, and it's not much different than the RSI. When you can see the same type of peaks and valleys between the MACD and the RSI. They are both oscillators, but sometimes they might tell you a slightly different story, and they might give you, one might give you a piece of information the other one doesn't. And typically what you'll get on the MACD is you'll start to see your signal line, your MACD line start to curl, like this blue line. When it starts to kind of curl back to the downside, means that you're getting to your price peak, and it doesn't go down right away. I'm actually going to expand this all the way up. We're going to go right here, March 29th. I'm going to open this all the way up, maximize the pain, and you can see there was a sharp peak here, and you will see that the price peaked here as well. The RSI peaked, and just got to the point of being overbought around 70, and then price leveled out and then just fell. So this area here, this will show you that it's a peak, and then once you see this blue line, your signal lines start to kind of lose momentum, starts to curl, It can curl to the upside as well. You see these little like curls up here. Some people wait for the cross. Some people wait for the lines to cross. For me, that's a signal that I think a lot of times happens too late. Like if you were to buy this cross here, the signal cross, you're buying the end of this day, and you're going to be immediately to the downside. So if you're looking at just simple trading, simple ideas of getting started, and you don't want to go through crazy indicators that require a lot of time and a lot of patience and a lot of understanding, there's some really simple things you can use. RSI is a very simple indicator. It will show you if you're in a bearish or bullish position. Under 50, you're in a bearish position. Over 50, you're in a bullish position. However, I'm looking for divergences where the price is going down lower, but the RSI is going up. Those types of divergences can give you little signals for crossovers and for they give you signals for reversals. And the MACD is just a simple tool. It's a very easy visual. You can start seeing when things are starting to peak and starting to come off of their peaks. And same thing with price bottoms, but you have to see that they don't always, it looks like it's going to flip here and it just went sideways until it just dove down again. So nothing by itself is going to be a good enough indicator to take a trade by itself. You don't take a trade just by looking at the RSI. You don't take a trade just by looking at the MACD. You don't take a trade just by looking at a candlestick pattern. You don't just see a doji and say, hey, I want to take this doji. You don't take a shooting star or a morning star, or you don't take a hammer or any of those individual candle patterns or 2 candle patterns or 3 candle patterns. You don't take any of those things by themselves. If this price was coming down and we made a hammer where we wicked down through this line, closed back above it, and we got a curl on here, and this had a bullish divergence on the RSI. So we have a trend stopping candle pattern. This is just hypothetical. And we have a bullish divergence on the bottom. And we have the MACD starting to curl. That would be a position to start taking that, to take a long and try to take a reversal trade, to trade the reversal back to the upside. And you would want to try to see if you get from here back to the moving averages at least, and see if that moving average rejects, or if you can get through it and get back to the support resistance line. So guys, I know I went over quite a good bit of stuff here, kind of long, wordy. I was kind of hopeful for maybe more people watching, more interaction, and not just me rambling on. But again, the big things is being able to use Fibonacci retracements, and we'll do one here on the daily just to show another one for Bitcoin. So Fibonacci retracement, Fib retrace from peak high to peak low, come across. And what I got to do is I got to zoom in a little bit because you want to do the peak high and low close. So there's our lowest close right here. That was our lowest close candle. And our highest open or close was right there. And then we got stopped on the way up right at the 38.2 line. Like, can never close a candle above it. We got to it and we rejected off of it. So 3 high wicks up to it, or 2 high wicks up, and then we start to sell off. And that's our big sell off here. Now we do the extension off of that. Trend-based Fibonacci extension. We go right from the red line down to the white line to the 38.2. Extend that out a little bit, and then we'll see right now we are in the 0.618 extension, and I think we get down to the 786 extension, which would be 21,855 with a wick down to about 19.7, 19.6, and that will get us to a 786 extension and wick us to the previous all-time high here, which was a resistance line here. I think will be our final support of this bear run for Bitcoin. And then all things will be good with the world again, and crypto will have been forgotten about, and then the smart money will be back in at the absolute bottom and be millionaires in 2 to 3 years. So that means to say, guys, I hope you enjoyed these tips. I hope you were able to pick something up, and if it was just way too simplified, let me know. Let me know in the comments if you watch this later. But as always, guys, until next time, peace.